So on an FHA Streamline refinance, there's a few things that are a little bit different than a normal refinance or a purchase. The biggest thing is that when you buy a house, you pay the closing costs up front. Now, on a normal refinance, you roll the closing costs in or you pay them out of pocket. Now, FHA's rules on a Streamline refinance, where you don't have to have an appraisal, and in some cases you don't even have to provide updated documentation. The biggest difference is that you're capped at the payoff amount. Now, the payoff is a little bit different than your balance, and the reason for that is when you make a mortgage payment, you're paying the interest in arrearage. In other words, for example, when you make your rent payment, you pay on the first of the month, and that covers that calendar's month. Now, when you pay a mortgage payment, you're actually covering the interest that accrued in the prior month. So when you order a payoff to pay a loan off on a mortgage, you're actually paying the balance plus the interest that has not yet been collected from the prior month. And there's also some other fees that certain servicers charge for just simply obtaining the payoff. And also there could be some mortgage insurance that has yet to be collected that has to be collected as well. So there's going to be a little bit of a difference in the payoff and the balance, and we just want to set the right expectations up front that your balance is going to be a little bit lower than your payoff, so that there's not a surprise whenever we determine what that starting point is. Now, the way that we cover the closing costs on a FHA Streamline, where you're not wanting to bring money to the table, we simply increase the interest rate so that there's a premium credit. Now, that credit is used to offset the closing costs and the prepaid items, which include taxes and insurance, and we can get into that later. And so that slightly higher interest rate is going to give you the ability to not increase the balance, but also improve your loan. Now, the great thing is FHA recently lowered their mortgage insurance premium. So the loan that you have currently, when you blend the mortgage insurance along with the interest rate, it's actually about 1.5 points. In some cases, it's closer to 2 points higher. So for example, if you've got 4%, it's really closer to 5.5, maybe 5.75% in terms of a blended rate. And so we'll talk about blended rates later, but just want to give you an idea that if the rate changes but you end up with a better scenario and the overall payment is lower, then it's going to put you in a better position. And that's when it makes sense to take advantage of an FHA Streamline refinance. Now, there's a few other reasons that you might want to do this as well, and we'll hit on some of those on a different topic, okay?